All right, so how to not lose in cryptocurrency and making sure that your stock portfolio, stock investments are not actually going to be lost on. So, if you don't know anything about cryptocurrency, don't know how to work, then don't invest in it. Do not invest in something that you do not know anything about. That's the key thing to absolutely anything. If you don't know how the investment works, if you don't understand that, for example, for the stock portfolio, let's say you got a stock investments and stuff like that, and you're a retail investor just buying a couple of stocks and hoping that they're gonna shoot to the moon tomorrow, next week, next year, whatever. Don't do it. Don't do it. You really are it's statistically impossible for you guys to win because you know what, all those investment companies that exist in the world, they have $1 million software that can predict how the stock market will do, that can predict what is happening, though what's going to happen with any particular stock. They follow this stuff every day, every single minute. If you are just somebody who has a job and maybe just want to be a retail investor, invest in some stocks and just hope it's going to moon tomorrow, well, you got to consider the fact you're not following the market every single day, every single minute, every single point, and you don't have that capability of doing that. You really don't. You cannot compete with those companies that are making millions and millions and millions and billions sometimes of dollars. You cannot, because they investing serious money to make sure they're not going to lose it. And even those companies, sometimes those investment companies actually do lose as well. So how do you expect to win against those companies when you are really not even investing as much time, not even nearly as much time as they're investing? We're not even talking about money wise, how much they're investing in the software that can predict this stuff for them. We're talking about just time wise, because every single minute, every single second, something is happening somewhere in the market. It's unreal how many events could be affecting any kind of particular stock, any kind of particular set of stock, any industry that you can probably snooze on, and those companies will know this a lot more, a lot easier, a lot earlier before you will. And cryptocurrency, by God, let me touch on this point. A lot of people I talk to, they have no idea how this even works. They have no understanding how mining and everything else like that, what's come in it. They just heard that this is something cool, that it's on a trend right now, and they're thinking, okay, I'm going to invest $1,000 next month. It's going to be $10,000. No, that's not how this stuff works. Maybe a couple years ago, maybe there was a chance of somebody, because everybody, because being a how you know how pyramid schemes works. We can talk about a little more pyramid schemes, but in this case, it's kind of a snowball effect. What everybody's saying, okay, we're gonna invest in crap coin, whatever, Bitcoin, everything else, Ethereum. We're gonna invest in this, and then next guy's gonna say, "I'm gonna invest in it. I'm gonna invest in it," and everybody else invests in it, and there's a snowball effect. Clearly, obviously, that's gonna raise in value because there's so much demand to it. A lot of those things, it's a simple supply and demand. When you have such a high demand going in, and we had that a couple of years ago, it's gonna calm down. That's why the price went down. But that's when you have the snowball effect where everybody wants to buy, and the price will go up. The price will go up for sure. And if you got on that wave, and if you didn't get out of it in time, you're gonna lose on it. And that's why statistically, average retail portfolio last year was down 30%. It's down 30%. Retail investors lost $350 billion. $350 billion. $350 billion was lost last year. That's insane. 30% lost. And there are so many investment opportunities, guys, that all over the place, whether it's real estate or just investing in yourself. If you would have just invested in yourself, in your business, and your ideas, you would have made a lot more money than losing 30%. So if you say you put $10,000 on it, you'll just lost 3,000. You're down to $7,000 just right there. And that's just average. That's just average. Some people lost thousands and tens of thousands, hundreds of thousands of dollars on nothing that they don't know about. If you don't know about it, especially if you leverage it. Leveraging is a very good thing. And leverage, when we talk about leveraging, that means taking on debt to make sure that you can make more profit on something. And but that's on a profitable investment. If there's an investment like this retail investment, putting us money on a stock, on a meme stock especially, and if you don't follow it, if you don't know nothing about it, if you just got on a wave somewhere, and especially if you borrowed money on that, then your investment, if you want to call that investment, will triple and double in risk, maybe quadruple, maybe quintuple in risk. So instead of losing just like, let's say, $3,000 because you did leverage, you used leverage on this. Instead of that, let's say you leverage out with twice as much, you're losing $6,000. You say you leverage is three times, then you're losing $9,000. It's nuts. Don't invest in stuff you don't know nothing about, guys. Do not. That's how you not lose. That's how you not lose money on cryptocurrency. That's how you not lose money on stock portfolios, on stock investments. If you don't know nothing about it, don't do it. There are multiple different portfolios you can invest in, and you just pay a fee to some companies. And it is very good to do that because power of compounding is very important. And if you invest in those companies that actually have a software, multi-million dollar software that tracks all this stuff for them every day and have people who work for it every day, that's the way to do it. But there are a lot of different opportunities you guys can go with and make a lot more money. Don't invest in something you do not know about. That's the key. All right. So instead of investing, like I mentioned, in something that you clearly have a lot of obstacles to know completely everything about and become a professional, like I said, compared to the investment companies, there are a lot of different investments. Like I said, we mentioned that you can probably invest in without having too much of effort and too much mathematical calculations going in there. Like I said, real estate is a lot of things. Real estate is a very big thing that I like to talk about because it really is a pretty simple calculation. I mean, even one evening, even in just one evening, you can make a simple calculation and understand exactly if that property is going to make sense. That's all it takes. It doesn't require an expensive software. It doesn't require thousands of people working on it, making sure and tracking how every stock is going to be doing. Because all you have to do is making sure, looking at the property and find out, okay, well, this property is going to make sense because financially I'm going to receive a lot of money for it. And another thing is too, it's a real estate property, so you can choose how to rent it out, for how much to rent it out, what's going to make sense, what's not going to make sense, and then you're going to actually even choose when and how to sell this property as well. So you have multiple different options you can work with this thing, and at that point you can actually leverage it. Like I said, as well, additionally, you have tax benefits. I mean, in stocks you do have tax benefits as well. If you have a long-term investments, there's going to be, if you hold it for longer than a year, then obviously it's going to be considered a capital gains return, capital gains, and it's going to be about 15-20%. But regardless, it's not going to be as favorable as you would have with a real estate. Real estate provides a lot more tax benefits than those will. And actually, mathematically, it doesn't require as much of a calculation. A single guy with one evening and one computer can look it up and just basically just, sip a little coffee and sit around and look around and find out, okay, well, this property makes sense. That property doesn't make sense. This property makes sense. That property doesn't make sense. Okay, I'm going to go buy that property. I'm going to invest in this property. A lot simpler. Yeah, it might require a lot more funds. Sometimes it does require a lot more funds, but it's a lot more stable investment than having to lose 30% on your investment. Could you imagine having to invest $200,000? And some people did that. Invest $200,000 and losing what on 30%? That's $60,000 you lost. $60,000. Now, 30% is quite a bit of a loss. Now, compared to real estate, good luck having to have pretty much even the crazy markets we have. Good luck losing 30% because that's a significant amount of money being lost. We probably had some markets back in 2008. We can look up. We did lost 30%, but that was outrageously crazy. That was outrageously crazy. And it's probably not going to happen again, not to that extent. So not just real estate, but it's small things. I mean, there's multiple different warehouses sell pallets, and sometimes not even just pallets, just some things that store returns or something like that that you can buy, and then a lot of people flip this stuff on Facebook Marketplace or other alternative platforms, and really doesn't require that much of an investment whatsoever. So it's not as massive as buying a house, but at this point, you're buying something at a significant discount, and you can look at a lot of those places where you can buy it at a really significant discount. I mean, some of those places sell it for 70 to 80% off. And then you list something like that and you sell it, you are very, 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 very unlikely to lose on something that you already bought at a 50, 60, 70% discount to lose any more money on it. You actually, if anything, going to make more money on it. Cars as well, additionally. I tell you personal experience, cars are really not that hard to buy and sometimes sell or not even lose your money on. Sometimes, yeah, you can, if you buy a wrong car, it's going to depreciate crazy in value. There are some brands that are like that that you really want to steer clear of. But if you buy a nice used car that's very much in demand, and if you can get a good deal and negotiate out of it, that's another key word: negotiate out of that price and make sure you get a better price, and then come back and sell that maybe to a different market, maybe to a better market, maybe somewhere where you're living in is a better market to sell this particular vehicle, whether it's a diesel truck. Let's say we had a situation where diesel trucks were selling a lot higher in our area versus in the other state. We had to go out there and buy those diesel trucks and then sell them here in our state because it was more profitable to do that. So sometimes you can buy that little niche and you can make some money off of that. Just as simple as that. All you have to do is just look at the values, look at the numbers, like I said, anything just as simple as buying, I don't know, chairs. You have brand new chairs you bought at a warehouse, and then you flip them. Then you made money on it. And you're not losing 30%. You're making some profit off of it. At the very worst case scenario, chances are you're going to just come out even. Again, don't get yourself involved into things that you don't know something about or that requires a lot of investment that you guys can't make or you guys can't have or you can't have put enough time into it. Invest in stuff you actually know and stuff that's really kind of easy, mathematically easy to invest in. Like, follow, subscribe. Thanks, guys.